From Theo Trade, this is Don Kaufman. It's March 27th, 2019, and you are watching the Theo Trade evening video. So the S&P futures, they closed down just shy of about 13 handles and did it on some decent volume. But what is more entertaining, at least to us traders, is people, we're getting some range out there. That is a range 28.31 all the way down to, 27.91, effectively a 40-point S&P range kind of thrown off inside of today's trade. Let me show you a couple of interesting things, though, inside of trade. And really, I want to be very forward-looking to what we can expect literally the end of this week, both Thursday and Friday. So the S&Ps right now are closed directly on a gravity point. That gravity point happens to be none other than 2811. Well, if you're sick of hearing about it, believe me, I'm sick of talking about it because we've been trading in and around the 2811, well, day in and day out. Let's actually open up a 30-day 1 hour for just a brief moment and make a quick point. 2811 has been kind of a key inflection point, again, of many of the recent days of trade. Really came down to it effectively on Friday, and that big sell side activity crossed through it, rallied back to it. We laughed, we cried. Where are we right now? 2811 once again. As I said, inside of the S&Ps, there's actually been some decent volume substantiated, and rightfully so, because we're getting a decent sized range, of course, inside of the markets on a day-to-day basis. Now, if you're an intraday trader, this is the kind of stuff, this is, well, what you want to see, like big ranges on an intraday basis. We're not necessarily breaking off any levels, so nobody is, getting hammered out there, but again, only really getting about a 13-point move, again, on some heavy volume. So what can you kind of expect moving forward? Well, one of the things I'd first point out is that even though the S&P sold off a little bit today, the volatility is not playing kind of like a killer role in this, meaning the volatility, this is 9-day volatility. You can cruise out to a 3-month volatility. It's picked up a little bit since, of course, last Friday and that kind of wicked sell-off we have on Friday. But we're not exactly rocking to the upside in terms of volatility. And the volatility indicator that I like to look at quite extensively is the VVIX, the volatility of the volatility index. Listen, if fear is being driven, if fear is being perpetuated inside of the markets, professional trade, okay, you'll see it inside of the VVIX. Why? Because what it means in terms of professional trade in the VVIX, it means the professional traders are going out and they're hedging their collective risks using VIX options. So if there's buyers of VIX options, we'll know about it. And today, there's anything but that. I mean, again, the VVIX is relatively flat. If you look at the Sizzle index, Sizzle, it's today's option volume versus the previous 5 days option volume. We're not exactly cooking in there in terms of sizzling. We're doing 67% of norm. Let's round it, 68% of norm, which effectively is a little bit light in terms of the option volume. And again, the volatility in the VIX itself isn't exactly kind of lit up to the upside. Now, let's kind of switch gears for a second. What's been in play lately? Well, any day would not be a day without discussing bonds. If you're not looking at the bonds, and especially today, then you're missing the bigger picture because the bonds were absolutely rocking today. This is what drove trade inside of the S&Ps. And again, this is, absolute wild territory for the bonds to the upside. I was actually talking to another trader a little earlier today, and I said to him, if I get the idea to short bonds, I'm like, just please stop me from wanting to do it. And I was talking about this again on one of the evening videos just the other day. And that's this. If you take a look at the bonds have exploded to the upside. Well, I'm ever the contrarian. But is this a position that I really want to take a contrarian stance in? Like, do I want to get short bonds? And I'm using the TLT in this case. And for this, I'm actually going to open up a 3-year weekly. And the answer is, oh no, I am not about to short bonds right now. And anytime that I get that idea popping into my head of shorting bonds, just open up a 3-year chart and say to yourself, this might be a very, very bad idea, at least to be short bonds right here, right now. Speaking of bonds, once again, I'm actually going to bring up, this is the U.S. Treasury site, and here we are. This is the 10-year, and again, this has been the most extensive discussion pretty much in all financial markets. That's the 10-year, and it's been falling kind of throughout the course of this week. You can see, again, 2.43, 2.41 today, dropping all the way to 2.39. Look at that. 2.39. Don't worry about refinancing that mortgage just yet. Oh no, this summer it looks like it could fall much more. And compare that to the 3-month, and the 3-month is at 2.44. So effectively, what's gone on this week, you've actually got more, if you will, of an inversion of the yield curve, which I think some of that discussion is kind of worn off. And there's a reason I'm actually showing this, okay? Because if you take a look at the bond market, which again exploded to the upside, and you look at the inversion of the yield curve, okay? This is the bonds today. I mean, literally, the bonds today are Mr. Toad's wild ride, up another 24 ticks. They did it on absolutely monumental volume out there. But at the exact same time, the financials, okay? We must be in wildly oversold territory inside of the financials. Why do I say that? Because the bonds exploded even higher today. Again, almost, 3/4 of a point. That's what 24 ticks is. There's 32 ticks to a 1-point move, so you get 24 ticks. What do you got? You got 3/4 of a point to the upside. The financials, almost unimpeded. The financials at this point have actually halted the decline. So you have to kind of ask yourself for Thursday and Friday, are we about to see a wicked rally inside of the financials? Clearly, you weren't going to see a rally today. And why weren't you going to see a rally inside of the financials today? Because the bonds are up so much. The bonds are suppressing those financials, okay? But if the bonds have so much as a downtick, it's just so much as a downtick, okay? These financials are going to catch fire and actually fly higher, take the S&Ps up with them. But at the exact same time that I'm saying that, again, this is what you want to look for Thursday, Friday. If the bonds, okay, they back off at all, S&Ps are going to fly. Don't worry just about the financials, but the S&Ps themselves are going to fly, okay? However, at the exact same time that's going on, you got to look at the monsters of tech. The monsters of tech, it's the collective, right? It's Facebook, it's Apple, it's Microsoft, it's Google, it's Amazon, all added up in a ratio. The monsters of tech, this is almost the weakest they've been, okay, in quite some time. You know, even last Friday when the markets got whacked back, right, it was still fairly negligible in terms of a whacking inside of the monsters of tech. But now we're starting to have we're putting together like 4 days. Things are looking weak in big tech. And when I say things are looking weak in big tech, obviously Apple is kind of the odd stock out, but still seeing quite a degree of volatility trading back to the upside today. But take a look specifically, okay, at Amazon, which again is down about 1% today. And moreover, Google. I don't know about you, but this is becoming trend-worthy to me. Google looks like it's about to be sold off. So we're in a little bit of a catch-22 as all of a sudden financials are just getting hammered day in and day out, right? So the financials are getting hammered, and you see the big sell-side activity inside of the financials, okay? We just zoomed them off the screen, but there's the financials getting whacked, okay? But now the financials held up relatively well today, and yet we're seeing the monsters of tech get hit. On a percentage basis, the monsters of tech are down 0.66%, which actually outperformed the NASDAQ to the downside. So as I said, we're in a little bit of a catch-22. Now, take what you will from that. Again, fear the bonds right now. Fear the bonds. They're going to move this marketplace. Those bonds continue even an inkling to the upside. They're going to throw in the proverbial towel inside of the S&Ps. We're going to crack lower. The bonds, though, selling off ever so slightly, and the S&Ps catch fire to the upside, head right to the next gravity point. All right, last but definitely not least, kind of on this evening's update, you got to take a look at the SPX, because I want to remind you of something inside of the SPX. You know, one thing that really resonates with me, first of all, this week, we're looking at about a $52 move. That's looking for a $52 move higher or lower. What have we actually moved? Well, this is the beginning of the week. The beginning of the week, we were right at about 2,800. We're basically +5 in the week. We're +5 in the week. Now, $52 move is expected this week. You have a 5-point move. What am I saying about the future of Thursday and Friday? Get ready to rumble, because we're about to move, and we're about to make a big move, and I'm going to show you exactly why. All right, that we have a lot of kind of pent-up energy inside of this marketplace. So we're going to look at the SPX, and I want to show you just the 2-day options in the SPX. These are the options, okay? They expire when? It says quarterlies. That's because it happens to be kind of the end of the quarter. But this is your regular Friday, weekly expiration. $28.44 is the expected move, okay? And you're like, okay, so what? Don, you're going to move $28. Yeah? Well, guess what? All of last week, we were expecting a $33 move throughout the entire week. Now, you mean to tell me we only have 2 days left Okay, only 2 days left, and we're expecting a $30 move inside of the SPX. What gives? Why is the volatility, okay, staying as high as it currently is in there? The market clearly sees something in here. Could it be the bonds? Absolutely. Could it be a news announcement? Sure. Throw whatever you want in there. Doesn't make a difference. What you need to know moving forward, we are ready to rumble. We're going to make a decent sized move, okay, throughout the remainder of this week. That includes just Thursday and Friday. With that, I want to thank everybody for joining us here at Theo Trade. Have a wonderful evening. Bye-bye.